The new year 2022 is already here. In today's video, we're going to talk about what are those 6 different instruments where we can invest our money and grow it in this particular year. Hey folks, welcome to CSKSpeaks. I am CSK, your personal coach, and today we are talking about money and investing. As I said in my last video, we were broadly looking at the trends of the money market for 2022. Now a step further is what do you and I can do with our money. In today's video, I'm going to talk to you about 6 avenues which are the common preferred avenues and how they are going to fare in this particular year 2022. So let's get started without much ado. Now before that, let's understand that Indian economy is here to grow, and estimates which has come in recently from the National Institute of Statistics speak about 9.2% of growth of our GDP. This owing to the base effect, that is the contraction of our economy to 7.2% because of COVID and the pandemic. All in all, it's going to be a bright year for all of us. Now, how can we make the most of this brightness? So, instrument number 1 coming your way is FDs. Well, I know many of us will not like to put our money in FDs, especially if you are from the Gen Z and the millennial generation, and rightfully so, because we can't afford to take much higher risks, and I don't have any arguments in that regard. But for those of them who still prefer to park their funds in fixed deposits, especially from the senior citizens category who want to protect their principal and also get maximum money for their bank, then we look at FDs, and this year is going to be a good year for FDs compared to the last 2 years. Because with increasing inflation and increasing interest rates, FD rates are going to go up as high as 6% or near to 6% in the coming year. So the tip is, if you've already invested in FDs, this is not the time to break your FDs. And if you're planning to put in some money in FDs, then this is the good time to put your money in FD. Next, bonds or debt instruments. Now, if FDs are going up, it's no-brainer that bonds are also going to go up, and the yield on bond, the 10-year yield, is estimated at 6.5%, which means you can now have more options for parking your money in corporate bonds, in government bonds, in long-term and short-term bonds. And those of you who are trading in bonds, in buying gilt funds and papers, this is good because the market is still going to be overall volatile. That means your equity market, your stock market is going to be volatile for 2022, and which means bond market is going to be a good trade if you are considering that. Otherwise, just put your money in these long-term debt instruments, bonds, and you get a good return on your investment. Now, these are for people who want to safeguard their principles and still grow their money at reasonable rate. Now, let's quickly shift gears and go to the next instrument. The third instrument is mutual funds. A little risky, but still safer. Now, here, when we talk of mutual funds, we talk about SIPs, systematic investment plans. I'm sure there are enough and more videos on the YouTube which talks about how to get into an SIP, how to maintain discipline while doing an SIP, and which are the SIPs to select and choose to suit your risk appetite. So I'm not going to repeat myself, but I'm going to tell you 2 simple things to keep in mind when it comes to mutual funds and this year 2022. Point number 1, focus on large caps. Why? Because this year is going to be, as I said, volatile, and because it is volatile, it's always better to follow industry leaders and large caps. So when you are investing in a mutual fund, look at those funds which have large caps in their basket. So large cap investments funds are very advised or very advisable for all of you to go in as far as mutual fund investments are concerned. Point number 2 when it comes to mutual fund is, if you have an existing plan, do continue investing in them. Don't stop just because there may be some volatility in the market. So continue to invest and be disciplined when it comes to systematic investment plans. Instrument number 4, and my favorite, equities, direct equities, or as we know it as stocks. Now, while this is feared by a lot of people, just to give you a little bit of an estimate, over the last 1 year, that is December 2020 to December 2021, the stock market, the Indian stock market, has given you an average return of 20%. 20% easily much higher than your FDs and your bonds, right? But it is equally risky. So this year, as I have been saying so far, it's going to be quite volatile. The markets have already started moving sideways. You look at it for the last 1.5 2 months, you've seen ups and downs almost every other day. Thanks to the US Fed changing the interest rates and stopping the easy pumping money policy, there are repercussions in the Asian and the Indian markets. However, if you stick to blue chips and large caps, if you stick to industry leaders, if you do your research well, your stock market investments will never disappoint you. So stock markets are going to be volatile, but at the same time, you can still venture out at your own risk. However, please do your homework. Instrument number 5. Instrument number 5 is the Evergreen Gold. While last 2 years, gold has not interested investors a lot because there has been a 5.1% dip when it comes to gold. But you know, when the markets are volatile, gold is the go-to for hedging your risks. With this year being a volatility market, or it's quite volatile in this particular year, gold is going to be the most sought after instrument. And the tip here is, put your money in digital gold. The sovereign gold bonds, which will be issued by the central bank, the RBI, is one go-to option, and I'm sure we will be able to get good returns on our gold investments. The last instrument, the 6th instrument for today, when it comes to parking your money, investing your money, and growing your money, is cryptos. Well, I am not a proponent of investing in cryptos, especially when there is so much of confusion and lack of clarity about its legality and all of that. But let me tell you this, in the last 1 year, it is the cryptos which has given woofing returns of over 75%. Just to give you a figure to compare, the much popularly called Bitcoin was around $27,000-$28,000 at the end of December 2020, but last year, December 2021, it went up to $50,000-$53,000. That is the kind of returns crypto has given. But having said that, it is still debated in the country, and I would not recommend anyone to put all your hard-earned money there. But if you want to try your hand at that, maybe 5%, 10% of your portfolio, investing it there might still give you a dipstick when it comes to crypto markets and its effect on your investment kitty. So here are the 6 things which you can consider for your investment. But no matter what instrument you pick, developing a healthy habit of investing monthly is more important. Yes, we all have grown up looking at savings. Saving is just one side of the coin. Investing your savings is the other side. As they say, money can make more money provided you employ the money rightly and appropriately. Hope This video will help you to get started on that investment journey, especially with the beginning of the new year 2022. And I wish you the best for growing your money forward.